really, when you boil it down and you look at a 1040 and you actually look at what you're inputting, it's like really not that complicated. And I encourage people to be a little less intimidated about it. Look at their W-2 when they get it. Understand that when they're looking at the tax column, this is what's getting taken out of my paycheck.
This is Hourglass, the podcast for United Way of King County in Seattle. As we approach the April 15th IRS tax deadline, we've decided to dedicate this episode to all things taxes. Coming up are two members of United Way's Credits and Financial Stability team who will tell you how we spend our time preparing thousands of returns free of charge while helping to make tax season a little less stressful for our neighbors. I'm your host, Joe Burris. Thanks for tuning in. Now, Intuit Inc., the makers of the popular tax preparation software TurboTax, list 11 reasons why people either file their taxes late or don't file at all. Among those reasons are procrastination, confusion about the filing process, bad advice, lost records, or the belief that filing taxes is voluntary. Now, some might scoff at the latter reason, but the truth is not everyone is required to file a return. In fact, there are minimum requirements for filing each year based on factors such as income, age, marital status, and employment type. You should check the IRS.gov website to see if you fall below the minimum requirements. Yet no matter when or whether you file, most folks don't look forward to the tax filing deadline, which is April 15th for most filers in all states except Maine and Massachusetts, which have an April 17th filing deadline. It's also important to note that if you live in a federally declared disaster area, you might have additional time to file. For example, the IRS has issued tax relief for individuals and businesses in Spokane County affected by wildfires that began last August 18th. Those taxpayers now have until June 17th to file. Now, if you've already filed your taxes this year, good for you. According to Chicago-based Investment Property Exchange Services, 33% of Americans procrastinate and wait until the last minute to file their taxes. Some cite the stress of filing, while others say they need extra time to get things right. Washington State ranks 23rd among procrastinators by state, but Seattle ranks 4th among procrastinators by city. Yet all procrastinators should take note. No one's confusing Uncle Sam with Father Time. Your return must be postmarked by April 15th. After that, the IRS may charge penalties and interest for each month you go without filing and paying the taxes due. The IRS says the current failure to file penalty is at least 5% and as much as 25% of the unpaid taxes for each month or part of a month that a tax return is late. And if that isn't bad enough, the cost of filing taxes isn't getting any cheaper. According to Pacific Northwest Tax Service, the average cost in the Pacific Northwest to file a very simple return, which means a tax return with W-2 income only, no dependents, no deductions, and no credits, ranges from $430 to $470. Yet filing your return need not be, for lack of a better word, taxing. For starters, United Way is offering free tax services to residents who make less than $80,000 a year, or less than $96,000 for non-single filers. Funded by the IRS, United Way, and the City of Seattle, the free tax preparation program runs until April 21st. Services are available at 18 different locations across King County, and virtual assistance is available through our online tax site. United Way tax preparation specialists are trained to help clients understand their tax situations and take advantage of credits like the Earned Income Tax Credit and the Working Families Tax Credit. And today, we've invited two members of United Way staff to talk taxes. Ryan McFerran is our program manager for tax credits and financial stability. Casey Lantz is United Way's outreach and relationship coordinator for tax credits and financial stability. Both say that it's not unusual for folks to feel stressed while trying to navigate our complex tax filing laws. They're here to help simplify some of that complexity.
I think taxes are very confusing. And people are justifiably confused by the process and what their responsibilities are when it comes to filing their taxes each year.
Yeah, I'd say overall, the average level of tax knowledge most people have is fairly low. I'd say even as someone who's been with the program several years now, I see a new tax situation basically every week. I actually got 2 things I've never seen before on Tuesday. So if I've been here several years doing taxes multiple times a week and I'm still seeing new stuff all the time, you can imagine if you're the person who received this form and you're like, I don't know what to do with this. Like they don't know any more than me. But so, problem is tax code changes all the time. Communication about the tax code isn't very good. Like one of the things that's happened recently is the House passed a bill and to propose a child tax credit expansion. It hasn't passed yet, but a lot of people think it passed. So we're seeing a lot of people coming in seeking that credit, even though it hasn't actually been passed yet. They've left questions. So, there's a lot of disinformation. Because the tax code is currently changing even right now through 2025 due to the Tax Cuts and Jobs Act, people are seeing different refunds amounts than they would normally have expected over the years. I'd say pretty consistently, a lot of the clients I've seen, I've advised that they amend their W-4. So I've helped them fill out a new W-4 because they're owing when normally they didn't. I'd say there's a lot of misinformation about how tax credits themselves work. A lot of people don't know that it's a phase in. A lot of people don't know that there's an income requirement. So, for example, you may be technically eligible for child tax credit at $2,500 of income, but realistically, in reality, you're not going to see money until, you make pretty significantly more than that. Usually I don't see much until like $10,000 worth of income. So there's just a lot of misconception on how tax credits work. There's a lot of misconceptions on what's going on with tax code changes. There isn't great communication about it, and there also aren't a lot of good resources to get that information. So the nice thing about us is you can come in and get help for free. And we have people who can explain what's going on and help you fill out a new W-4 and talk to you about, hey, like you only are eligible for a refund. You are not eligible for tax credits, or you are eligible for tax credits. Here's why. Let's open your 1040 and let's look at all of the numbers on it, and I can tell you what they all mean.
Last year, United Way's free tax prep program helped nearly 14,000 clients claim more than $13 million in tax credits and refunds. And we look forward to doing it again this year.
We are seeing a lot of people who still need to file their taxes. A lot of people who are, coming to see us, coming to work with our volunteers, people who are interested in accessing some of the additional benefits like filing for the Working Families Tax Credit, which is a new state tax credit that's available to them and something that we can help people to apply for through our tax filing process. We're seeing a lot of people who are still needing our service.
Casey and Ryan say that one of the best ways to keep the stress down during tax season is to stay informed about our ever-changing tax laws, whether you file on time or miss a deadline. They say it's important to note that deadline penalties apply only to those who owe the IRS money. If you know you're due a refund, you need not be so concerned about the deadline. Otherwise, make sure you file your return on time. But even if you miss the deadline, you need not panic.
In the event that you do owe, or you're most certainly that you owe, you missed the deadline. What happens?
Nothing bad. Nothing bad's going to happen. The IRS is going to, if they notice, they'll send you a letter. But a lot of the times, honestly, people coast. I mean, that's how you can have years and years of back taxes and years of owing taxes, because they're not going to bang down your door and come for you. What can happen is you'll get penalized. Well, it will happen. You'll get a fee. So you'll end up owing more money the longer you make the IRS wait. So it's a good thing to try to settle your debts with the IRS, because they will eventually come to collect. And if they have to come to collect, then that might lead to wage garnishing or whatever, but that'd be years down the line.
That's an important piece of the filing deadline. It's not just that you have to file your taxes by the 15th. this year, or whenever the filing deadline is each year, it's also that you need to have paid your tax bill by that deadline as well. So if you're in a position where you're going to owe, but you're not able to pay the bill, then you're probably looking at some of those penalties, some of that interest charged already. And so the question of whether or not you actually do rush to file, or potentially, spend a little bit of time making sure that your return is being done properly so that there might be some additional savings there. There's not a huge difference for people in that situation. You're already in a position where you're going to end up paying a little bit more, but by taking a little bit more time to ensure your tax return is being prepared and filed properly, you may actually end up recouping a little bit or saving a little bit.
Okay. And for this year, what is the latest someone can file?
The filing deadline this year is April 15th. And then if they do file an extension, they have until October 31st, I believe, to file their taxes.
I don't remember the exact date, but I know it's in October. But yeah, there's that's with an extension.
Yes.
The extension will help you avoid a late penalty. And if you didn't file for an extension and you file late, then you'll just have to absorb the penalty. Actually, this is a good time for me to say something about tax liability and self-employment, because if this is probably the number one thing I see, self-employed folks are not prepaying their taxes. You should be prepaying the IRS quarterly. If you owe over $1,000 in tax liability at the end of the year, you will get a penalty for owing too much money. So if you're self-employed, if you're driving for Uber, or Amazon, you run your own business, whatever, you should be sending in quarterly payments to the IRS in order to avoid that. They basically call it a late fee, but if you owe over $1,000, then you will be penalized. So I have been in this program for over 4 years. I have had one client, who has prepaid their taxes to the IRS, and I have prepared a lot of self-employment taxes. So I think a lot of people don't know about this, that this is what you should do.
What is the process for prepaying your taxes? I've heard a lot of people talk about doing it. What is the process? How does one do it?
Well, if you're W-2, it's getting taken out of your paycheck automatically. That's what happens when you fill out your W-4 when you get your job. Although it's important, you should also, when you get a new job, you should check your pay stub. Make sure they're actually taking withholding, because I have gotten some clients who didn't have their withholding taken out, and oh boy, did they have a big tax bill at the end of the year. But if you're self-employed, basically you just need to go on the IRS website, and there's literally like a tab for it. Okay. Just make a payment plan, and you can just prepay. And again, it's quarterly. So literally when you file the prepaid tax form, it just asks you, when did you pay how much in each quarter? So it literally asks you each quarter how much you paid towards the IRS. So, okay. And it's very simple. Making the IRS account might be, it has requirements to it, but probably ID requirements and whatnot. But once you have it, it's relatively a simple process.
And if you're someone, I know a lot of people who have a full-time job, but then they also do part-time work, they do freelance work. Yeah. You still should be paying for that part-time work or that freelance work quarterly toward your taxes.
Well, you actually got two options. So one, you can do quarterly payments. The second is you can amend your W-4 for your W-2 job. Mm-hmm. You can ask them to take more withholding.
Okay.
And that would cover your tax liability for your self-employment. There's different kinds of tables you can use. If you pull up the W-4, you can see different places where you can put stuff that will modify how much of the withholding it is. Mm-hmm. But the simplest way to do it is just calculate what your liability is likely to be. Mm-hmm. So say you're making $15,000 in self-employment income on top of your W-2. Well, you could probably just roughly guesstimate 12% of that, so whatever 12% of that is, and then bring that down, because when you amend your W-4, it's going to ask you per pay period. Mm-hmm. So if you're being paid 26 times a year, then just multiply 26 times whatever, a number, and then try to hit that amount of 12% tax that you likely owe on your self-employment. And you can amend your W-4 at any time. So if, say, you're freelancing and your expectations of how much you're making change, or you stop freelancing, you can always amend your W-4 and say, okay, don't stop doing that. 0. Stop taking extra withholding. Legally, you are entitled to change your W-4 at any time. Your employer is legally obligated to accept a new W-4.
See, I'm listening to all of this information that you're giving, and I didn't know any of this stuff.
Well, there's no information being given out about this. I mean, I remember when I first got my job, I always tell people this because I think it's relatively funny in hindsight. When I got my first job, my employer handed me a W-4 and I said, "What's this?" And he's like, "It has something to do with your taxes." And I was like, "Cool. What's head of household?" And he's like, "I don't know. But when I put that, I seem to get more money." So I put that, and for years, I was getting I was owing a lot of money, and I didn't know why. And now, I started working here, and I'm like, oh, because they're taking significantly less withholding than they should have been because I put head of household instead of single. So, but there's no, they don't teach this stuff in school. No. The IRS doesn't do a good job of disseminating information. So we kind of just have to learn by doing, I guess you could say. And really, I think taxes have gotten scarier and more esoteric than they should be. It's actually relatively simple most of the time. And yeah, business taxes can get really complicated. If you have a Roth, that can get complicated. Estates can get complicated. But for the most part, most people have simple income situations. And really, when you boil it down and you look at a 1040 and you actually look at what you're inputting, it's like really not that complicated. And I encourage people to be a little less intimidated about it. Look at their W-2 when they get it. Understand that when they're looking at the tax column, this is what's getting taken out of my paycheck. Understand when you fill out a W-4, this is what that form is for. It's to inform your withholding. It's not as like
esoteric.
Yeah, it's not as esoteric or as much of an eldritch being as it seems. I mean, it can be. Trust me, things can get complicated, but for the vast majority of our clients, especially like low-income clients, it really is relatively simple.
Well, that's everything that you just said. It's so good to hear. What are some other things that you would tell our clients coming to our tax sites? What would you want them to leave knowing that they didn't already know, outside of whether they owe it, whether they get a refund?
Yeah, I guess that would be the most important piece. I think coming to the tax site, I would say don't be shy or bashful about how you've handled your taxes in past years. I think that can be kind of a not necessarily a sore spot, but an area where people don't necessarily want to disclose what they've done in past years, because there are people who don't file. There are people who go through kind of more informal routes, try and file themselves. They work with a friend, a family member, a community member who, files their own taxes and is offered to do it for them for free. It seems like a good way to check the filing box, maybe get a little bit of money back from the government, and also not have to pay a lot of money to actually go through that process. But those are kind of the filing methods where we see our clients end up missing out on tax credits the most, or the benefits of filing the most. And so if you come to one of our tax sites and are, upfront about, okay, I'm here to file my 2023 tax return. Also, I haven't filed my 2022 return. Also, I had, my aunt's best friend, Cindy, file my 21 return, and I'm not sure if she did a great job with it. If you're honest with us, we can actually help you in those situations. We can file that 22 return for you as long as we have the proper documentation. We can potentially amend the 2021 return for you so you can actually get some more money if there's something that Cindy wasn't able to claim for you to help you access. So I think that's one of the most important things is, it's not just about filing the taxes that are, most front and center. It's also about helping you to potentially overcome some of the other choices that you made in the past when it comes to filing your taxes.
Oh, that is great. That is great. And I feel like just listening to you, I feel like I don't have as much to fear when I go to the to have my taxes filed. And I have no idea whether I'm owe or whether I'm not, whether I'm going to get something. But, just I think just that deadline at April 15th kind of triggers people. And so it's good to know that don't worry about it. You can take it.
Absolutely. Yeah. Just like Casey said, the IRS is not going to be knocking down your door the morning of April 16th if you miss the filing deadline. If you do owe, there might be some additional costs, but they also offer payment plans. And so the IRS does make it more accessible to repay tax debts. And then, some people might be afraid of, liens, wage garnishments, those kinds of things. In general, the IRS is a bit of a slow moving machine. So you can kind of trust that they're not going to necessarily be coming after your money too quickly. And then also in general, they don't pursue those methods when somebody just owes a few $100s or, even maybe a few $1,000s. It's more for the people who have higher tax bills or maybe they haven't paid their tax bill for a few years. Those are the people that could potentially see some collection action happen.
And that being said, the repayment plans that the IRS offers are pretty reasonable. They're long, they can be very long. And if you absolutely can't afford it, there are organizations in the area that can help. The Taxpayer Advocacy Service is one of them.
Okay.
There's the UW Law Clinic. Look, you're not necessarily going to get out of a tax bill, but if you work with a taxpayer advocate, they might be able to see what they can do if you're in a really tight jam. But yeah, the IRS is not a boogeyman. They can be very stiff, and they're not very creative, but they're not going to come after you. It's okay. But I guess in terms of what I would recommend for folks to do, try, income is a sensitive topic. Taxes are a sensitive topic. A lot of people have different opinions about taxes, but at the end of the day, we're in the system we are. And I think it would be good if most people have a basic understanding of how tax credits work and how refund work. And like I was saying earlier, a lot of the times if you're coming in, say you're single and you have a W-2 job, the majority of the time, whatever you're getting back is just because you overpaid your taxes and withholding. That's it. There's nothing else going on there. And if you owed it, it's only because you didn't pay enough. That's it. It's not anything more than that. And, I think, it is good to know, if you're single, there really aren't too many tax credits out for you. It helps you kind of a better understanding of what's going on when you file. If you have children, you might end up getting a larger amount of money back because you might be getting credits and a refund. But it's good to know, hey, things could change. Personally, I'm hoping the child tax credit expansion goes through. But as of the moment, when your kid turns 17, you're going to go from getting potentially, $2,000 to $500. You're going to go from seeing a large amount of earned income tax credit to a lot less of it. So it's good to know, hey, what's going on? What age are my kids? When my kid goes to college, are they still my dependent? Make sure when your kid goes to college, hey, are they filing on their own without telling you? And then not putting that I'm a dependent on the sheet, because that's something we see all the time.
Well,
is, kid, I get it. I got it. And I moved out at 16 and I was I'm my own person now. But, you cause issues on your parents' return if you file without telling them and you don't mark that you're a dependent still. Because then they can't claim you and then all of those tax credits go away. When it comes to education credits, I'll be upfront, they are very confusing. But both the parent and the dependent could potentially claim that. Mm-hmm. So it's good to have a conversation with your college kid, figure out who it's going to be more beneficial for to claim those tax credits. Or if they even can, if they're taking enough courses.
Right.
But a lot of it is kind of the IRS isn't super clear about the phase in, phase out period for earned income tax credit and child tax credit. But ultimately, it's good to know what the rules are, because at the end of the day, tax credits are the U.S. government's best tool for redistributing money to people in need, particularly families. The Earned Income Tax Credit has the highest impact any poverty program in the United States. It's up there with like food stamps. So, but people don't really think about it that way. And a lot of people don't even know they're getting Earned Income Tax Credit. But it's huge. It's made a huge difference in people's lives, that tax credit. So when people talk about, expanding the Earned Income Tax Credit, expanding the child tax credit, these are important causes. Mm-hmm. And it's good to like stay informed about what's going on with those, because they have a direct and tangible impact on people's lives. So don't glaze over the moment taxes and tax credits come up. They have a real impact on your life, everyone's life, every citizen and non-citizen in the U.S. Anyone who earns money in the United States, regardless of your status, is impacted by the tax code. So it's good to, perk up a bit, listen a bit to what's going on, and stay a little engaged about what's going on your W-2, what's going on in your 1099s, what's going on in Congress. You don't need to be a tax nerd, but it's good to at least just have a surface level understanding of like non-refundable versus refundable and, other things like that. If that makes sense.
It does. Casey Lantz and Ryan McFerran, thank you so much. Really appreciate it.
Thanks, Joe.
Yeah.
Pleasure.
Once again, United Way of King County's free tax prep sites will run through April 21st. Our IRS certified volunteers will be available in person at multiple locations across King County to help do your taxes for free. Those sites include South Center Mall, near the Sears store and across from Kitanda Espresso and Acai. The South Center site is open Thursday through Sunday from 11 a.m. to 7 p.m. For more information, log on to uwkc.org/need-help. United Way can also prepare your taxes online through our virtual site. Please note that those who use our virtual option must treat it as an in-person visit. You must be available for the duration of your tax return process, and you must provide all necessary documents and information, including your Social Security number and photo ID. Documents and images must be photographed and uploaded to our secure server. Again, for more information, log on to uwkc.org/need-help. At United Way of King County, we are working side by side with communities to build an equitable future for everyone. Hourglass United Way is a podcast that highlights how we and our partners spend time making a difference in our communities. Our work is made possible by the generous donations from people like you. Please send comments and suggestions about our podcast to hourglassunitedway@gmail.com. To learn more about our work or to support United Way, log on to uwkc.org. I'm your host, Joe Burris. Thanks for listening. Until next time.